Hello traders, Gary Wagner here. Approximately 11:30 in Honolulu, 6:30 in New York. It is Tuesday, second day of November 2021, and this is the daily report for gold and silver. The FOMC meeting will conclude tomorrow, and a statement will be released with the most current monetary policy of the Federal Reserve. While we expect them to announce tapering, I think that he will be very nebulous about when liftoff will occur, in other words, raising or normalizing interest rates. In anticipation of tomorrow's conclusion of the November FOMC meeting, we do have gold lower, down $6.90, and currently fixed at $1,788.90. That's basis the most active December contract. Dollar strength had a lot to do with today's decline, probably about 2/3 of it, and some light selling in the market. The dollar index gained about 0.2% and is currently at 94.085. Lastly, silver is down by about 50 cents today at $23.58. Unquestionably, traders are intently focusing upon tomorrow's conclusion of the FOMC meeting. While it is highly expected that the Federal Reserve will announce the onset of tapering, it is whether or not they reference interest rate hikes or interest rate normalization with any kind of timeline. If they don't, that could leave market participants wanting more. And the fact of the matter is the Federal Reserve has kind of painted itself into a corner, stating that the current rise in inflation is transitory. Because the bottom line when you speak to most economists is that the Federal Reserve cannot in any way control supply chain bottlenecks. What I am most concerned about is stagflation. That is the conditions where persistent high inflation is combined with high unemployment and stagnant demand in terms of a country's economy. Considering that our GDP reported for the third quarter came in at 2%, and that's from 6.7% in the second quarter, we can definitely say that there is a slowdown in the economic recovery. The fact that we're looking at inflation higher than we have seen since 2008 and still have persistent high unemployment, I would say that what we are experiencing now is stagflation. And the Federal Reserve cannot address many of the components of that, such as high unemployment and a stagnant demand in the country's economy, without continuing their extremely accommodative monetary policy, which includes keeping interest rates between 0 and 0.25%. To tighten them too quickly would have the opposite effect and actually magnify stagflation rather than dissipate those economic pressures. And that is why I believe the Federal Reserve is stuck between a rock and a hard place, and they know that. And based on that market analysis, meaning that we currently are in a period of stagflation, the Federal Reserve cannot raise rates without having a detrimental effect and further slowing down economic growth. And it is for those reasons that we have just spoken about that I do not think that Jerome Powell's press conference will address the rate hikes and the timeline for that in any kind of detail. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.